Hello, traders. Gary Wagner here. It's just about 2 o'clock in Honolulu, 7 o'clock in New York. It is Monday, 4th day of January 2021, and this is the daily report for gold and silver. And what a way to start the year off. A $51 move to the upside in gold, a 3.5% gain in silver, about a dollar gain. Phenomenal move as traders and market participants are quickly adjusting to the fact that the pandemic is getting worse before it's getting better, and the economic fallout must be greater than we originally anticipated. We saw that in equities selling off and the precious metals along with Bitcoin moving up. We'll talk about different areas of resistance, our current plan for our trades in futures today. We'll cover our ETFs tomorrow, but first to the price board. Traders, a truly historical day for both gold and silver pricing, with both precious metals rising between 2 and 3.5% on the day. We're looking at the most active contract, February gold. It is currently fixed up $51.60 at $1946.70. Spot gold also had a significant gain, currently fixed at $1,942.30. When we look at silver, that was certainly the shining star of the precious metals complex today, gaining 3.68%, almost a full dollar to an ounce of silver, currently at 27.38.5 cents. When we look at the two ETFs that we follow, first GLD is at 182.33 after gaining almost $4 per share or 2.23%, and SLV had a significant gain over 3% at 25.35. Lastly, and extremely noteworthy, is the continuing rise of Bitcoin futures. This, of course, is off the CME exchange, $31,340 after gaining $1,955 on the day. You can always get more information on Bitcoin by clicking on the Bitcoin button at the top of the screen and looking for today's commentary. Let's take a look at our technical studies. Obviously, today's $51 move in gold was massive, it was substantial, but even more important than that, it broke through some very, very significant technical levels, which really changes how we're going to look at different areas of support and resistance. I've just highlighted the area that I'm talking about. And the things that you want to be aware of is, first, it opened just above the 100-day moving average. You can see that here. This line here represents the 100-day moving average, but most significant is that it broke above the 23.6% Fibonacci retracement at 1939.70. Now, why are these two factors so significant? Well, first of all, this data set is something that we've been using for quite some time because it covers the greatest price move we saw last year from 1450 to 2088. When we do that, we have various lines, 78, 61, 50, and so forth, but the 23.6% retracement is the last retracement that comes in before you hit your baseline up here at 2088. What that means is that when we're looking at different areas of support and resistance, we have to have a different approach to effectively be able to identify those price points. And the most significant way to do it, as well as one of the simplest ways to calculate tops or bottoms in a market, simply put, is to look at various tops in the market. So you'll notice that I've got the orange line, two different colors of yellow, and then a white line. And they represent tops because now that we've broken above the 23.6% retracement, the next top that we're going to see comes in right here, as you can see, by circling the price point of 1966 and the top that it is referencing. That came in approximately the first week of November. Then above that, we've got 2001, 2052, it is derived off of this top here. And so these would be the minor levels of resistance that, should gold continue to climb, these are the points we want to look at as a potential area for resistance. By chance, if we continue the kind of momentum we've started with at the beginning of the year, and we break through 2025, we absolutely, in my opinion, have clear sailing up to the record top at 2088. On Sunday, we sent out a trade alert. All traders should have their stops at 1908. We are long at 1890. Markets at 1946. So we do have sizable profits. My strategy right now is, if we continue to see the market rise, we are going to use these various levels here, here, and here as determining levels to move our stop just behind once or if the market price breaks through these particular areas. Traders, the next set of charts that we're going to look at are a daily and a monthly, and they are really focusing on Elliott Wave along with Fibonacci extension. This is the one that I have been using over the last month, and simply put, it looks at this tower bottom here as the conclusion of a wave 2. Our wave 3 begins at that price point, 1450 up to 2088, and then we have a correction taking us to 1760, and we have been calculating where we believe gold could go based upon an extension of 0.618 of wave 3. And so that is a fractal aspect of the larger Fibonacci retracement that, simply put, you would create by looking at a monthly. And as you can see, each candlestick here represents one full month. This goes back really to about 2000. We've got our wave 2 starting up at approximately 200 up to 1919, which was the top. It then has a correction going to the low that occurred at the end of 2015, beginning of 2016, and clearly puts us in a fifth wave scenario. The best analogy that I can present to you in terms of using fractals within different Elliott Wave counts is to look at them as Russian dolls. A smaller doll fits into a bigger doll that fits into a bigger doll. So in the same way, you can see that this is a much longer data set, and most importantly, because of the length of the data set, the numbers that it is predicting are anywhere between 2073 on the low side, and that we have pretty much taken out with the record high, but more likely 2346 as a really strong candidate for where we could see gold's rally terminate, but it would be somewhere under, call it 2700. You could come in with a 90% extension, an 80% extension, but you're not going to get more than a one-to-one relationship. So we'll explore this in more detail during this week, but I thought it was something that was absolutely noteworthy. As far as silver is concerned, we certainly saw a dramatic rise today, gaining well over 3%. We're above $27 at $27.35 currently. In much the same way as we looked at gold, when we do our basic fib retracement, the last retracement number that comes in, the 23.6% retracement, comes in at roughly 25.58. We are well above that. So we need to really look at a series of tops in the same way that we did with gold to ascertain potential levels. The first level that I'm seeing comes in at 28, and that is based upon that top that I just circled. And then we have this top that comes up here, which is at $29.32. And then, of course, the record top that comes in at about $30. So just as in gold, we want to see if we continue to track higher, if we'll find either resistance here, or if it will make a stab for a new record high over the last couple of years. But these are the significant points that we want to look at. In the same way, if we move above these various levels, these will be the areas where I will look to trail the stop behind. On tomorrow's show, I want to do the same thing and cover the ETFs GLD and SLV, but I think that's enough information for the day. We had a great day. We made a lot of money in all of our positions, and I'm hoping that this is an indication of more to come this year. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.